to discuss more about what the Fed decision means and the outlook ahead for US the economic growth projections, we are joined in by Peter Cardillo, the Chief Market Economist at Spartan Capital Securities. Hi, Peter. Thank you so much for joining. A good evening to you, and it's always a pleasure to have you on the show. First of all, the rates were held steady, which was widely expected. But want to understand from you the key takeaways from what is the direction ahead from the Fed side, because what we are seeing is it is a period of uncertain times, as this has been flagged before also. So just want to get your overall perspective on the meeting which took place and also on the Fed chair's commentary going ahead.
Yeah, I think, one of the reasons why the market applauded the Fed statement and, of course, Fed Chief Powell during the press conference is the fact that they did not hint to the economy slowing down to the point where we might be headed for recession. And obviously, the dot plot indicates two rates, which was already in the market. And they also, lowered the forecast, and so lowered their economic forecast a bit. And so I think that was the key point. And the fact that they're going to have slower runoffs on their balance sheet was a positive point for the bond market, because that means you can have a less crowded bond market, and that could mean that yields might drop, even though the Fed funds rate remains at 4.25%, 4.5%. So I think the markets took solace in this, and we managed to rally. And I think this could, in the short run, help stabilize stock prices and probably actually have more run-ups in the coming days. However, I don't think that the correction that we're in has yet to be completed. So we could likely get some more relief rallies over the next week or so, but I don't think that the correction is over. And I say that because, once again, the Fed statement and Mr. Powell stressed uncertainties, and those uncertainties are due to tariffs. And the Fed chief said, we have to wait and see what the impact of the tariffs are going to be in terms of inflation.
Absolutely. Peter, I just want to emphasize on your last point that you've made, that, as you've said, there's still some uncertainties. The bigger debate currently is on the growth, economic growth at one front, while the inflation concerns are increasing. Again, what we are looking at, the consumer confidence index also, even the consumer spending, that has deteriorated over the past couple of months if you are looking at the current indicators which are there. So considering that, I want to understand from you the probability of the rate cuts, which are still, the same as what was there in December before. But there are still indicators now pointing towards Fed being forced to cut rates considering the economic growth outlook which is there. Just want to get your sense on the overall inflation picture, whether while the Fed does maintain that this would be transitionary in nature, what is your outlook on the same?
Yeah, well, I think it comes under the title of stagflation. And we saw that in the commodity markets. We saw gold rise even to further heights during the press conference. It's basically making record highs nearly on a daily basis. And the reason for that is that if you do get two Fed cut rates this year, and by the way, I'm not sure if those Fed rate cuts are going to come in June or perhaps in the beginning of the fourth quarter. The stagflation scenario is what's basically boosting gold prices. And of course, if you still have growth, you could have corporate earnings, maybe not as strong as we've seen them, but that doesn't mean that corporate earnings are going to turn sour, especially if you have two cut rates this year. So I think that, that's the key here. And the stock market for now is likely to cope with stagflation.
Right. The also bigger picture, if you are considering, is the US debt. Now, if you are looking at it, has been a concern. What do you think would be the direction on that from the Fed's front? Also, now in the recent announcement, in yesterday's commentary, they did mention that they would slow down the pace of its balance sheet running off. So I also want to gather the overall debt picture for the US. What is your view for the same?
Yeah, well, I think that's good news, and another reason why I think the bond market actually we saw yields actually go down and not up, and I think the reason for that is because if you have less competition in the market, right, yields could actually drop, and so that would be a strong point in terms of the equity markets.
Okay, and my final question to you is about the implications. While you've mentioned about the uncertainties which are still there, want to gather your sense on these Trump tariffs, the reciprocal tariffs effective from April 2 onwards. Considering all this, your picture of the emerging market like India, what's your outlook here?
Well, it appears that your prime minister, when he met with Mr. Trump, said that he would make a deal. So I'm not too worried about India. And if the reciprocal tariffs do go forward, if they go forward with them, um, that will eventually be a problem for the global markets. And if you have a problem for the global economies, every economy will get affected. Question is, how hard? I kind of think that India might escape any serious consequences.
Thank you so much, Mr. Cardillo, for joining and sharing your perspective on the US markets as well as India. Once again, it's always a pleasure having you on the show.
Thank you for having me.